Internal Revenue Service IRS Tax News. IRS provides details about settlements in syndicated conservation easement transaction initiative. IR 2020-228, October 1st, 2020, Washington. As the Internal Revenue Service continues combating obsessive syndicated conservation easements, the agency today released additional information to help address questions related to the ongoing settlement initiative. Today, the Internal Revenue Service Chief Counsel released Chief Counsel Notice 2021-001. There's a link to that here, CC Notice, which contains information regarding Chief Counsel's settlement initiative for certain pending tax court cases involving abusive syndicated conservation easement transactions described in IRS Notice 2017-10. There's a link to that here, SCE transactions. Prior coverage of the settlement initiative can be found in IRS News Release IR 2020-196. The IRS encourages investors to seek independent professional assistance with understanding the settlement terms and CC notice, and to help these assess their hazards of litigation. So if you're in one of these situations where you have the abusive syndicated conservation easement types of transactions, or may be involved in something like that, then again, this is an area where the IRS is basically cracking down, putting more focus and emphasis on, and they're basically saying, you know, if you want to settle at this point in time, it would be better to settle now, because they're focusing in on this situation, on these areas. And if you should basically get independent, obviously, counsel about it at this point. So investors would well advised to obtain counsel for competent independent advisors not related to or recommended by the SCE transaction promoter. So obviously, when you're looking into counsel about these types of things, if you basically have talked to a promoter that puts you into participating in one of these types of transactions for tax benefit, if you go to them for counsel, then obviously you might get some biased counsel. So you probably want to talk to different people at this point in time and pay some people for some independent advice, some independent research, and get some opinions from different areas as to what the best track forward would be. As you do so, you'd probably want to do some research yourself on some of the actions that the IRS is taking, so that whoever you do talk to is aware of the current conditions that are going on and what the IRS is currently doing and about this particular area. So as previously noted in IR 2020-196, the IRS has been very successful in litigating SCE transactions. So they've even abbreviated it here. So they're working with it a lot to abbreviate the transactions. And so what they're trying to say is, look, we're building a case on this. Our track record is better, because obviously in this, when they have to litigate these things, they have to actually litigate the things, and they're basically saying that, you know, they're enforcing their track record at this time, saying they've been successful in moving forward with these types of transactions in court and in actions they're taking. So while some promoters have attempted to distinguish the decided cases, claiming that their transactions are, quote, different, end quote, and do not suffer the same flaws, the IRS has many grounds for disallowing the tax benefits claimed for these abusive transactions. So they're still saying there's some promoters out there saying that the IRS believes are qualifying within these transactions. The IRS, it looks like, believes that if they were to take action here, they could win, they could do. But the promoters are saying no, they fall outside the current actions that are taking place and may still be promoting the transaction. So again, obviously you want to make sure that you get independent counsel and advice as you move forward in this area. So the IRS will soon publish updates to the conservation easement audit technique guide, which will set out new arguments that taxpayers can expect the IRS to make in cases involving SCE transactions. So again, if you're talking to someone about that, they'll give you this information, and then you can take a look at what to expect within this process, and that should be able to help you with your analysis. So they're looking to be transparent here as they move forward, which is good, so you can kind of know what to expect. The CC notice reflects the IRS's continuing efforts to combat abusive SCE transactions, notably the newly established Office of Fraud Enforcement and the National Fraud Council are coordinating with examining agents and chief counsel attorneys to canvass cases for additional fraud conservations, which might include assertion of the 75% civil fraud penalty or, where applicable, referrals to criminal investigation. The CC notice will respond to recurring question raising and several groups of participants that have approached IRS Chief Counsel seeking to resolve their cases. The Chief Counsel Settlement Initiative requires that the partnership that engaged in the SCE transaction and all its partners agree to settle on the offered terms. Those terms include a complete disallowance of the claimed charitable contribution deductions and penalties, although some partners may deduct their cost of investing in the partnership. The CC notice explains that in rare cases, Chief Counsel may permit less than all the partners to settle on these terms. So they're basically looking for all the partners to basically settle on it in order to be in compliance, in order to accept the basically offer of the terms as they're shown in this case, except under circumstances where they may have some exceptions. So in most cases, however, the IRS will require settling groups of less than all partners to pay an additional 5% penalty, reflecting the lost efficiencies of the IRS having to proceed with the partnership case. The IRS and Chief Counsel encourage partners who want to settle to work with other partners to reach a full resolution of the case. So they're basically saying, hey, you know, if one partner wants out, it would make it a lot easier for the IRS if you would convince all the partners to basically act as one, rather than one or two partners that want to basically be removed from it, while the IRS would still have to continue to move forward. So they might, in those cases, if they allow that, have an added penalty for that situation. The CC notice also indicates that the IRS will settle with individual partners or groups of individual partners only when they own a significant percentage of the partnership and they cooperate with the Chief Counsel, which may include providing evidence that Chief Counsel might use to support its contentions in the litigation. The CC notice provides that partners or groups of partners interested in resolving their cases on these terms have 30 days from the date of this notice to elect to settle. The CC notice also explains that Chief Counsel may consider making the same offer to newly filed cases in tax court. Chief Counsel will consider a variety of factors in deciding whether to extend the offer, including whether the partnership fully cooperated with the IRS during the audit. Finally, the CC notice answers numerous procedural questions related to the settlement terms.